Yeah.
Okay,
Yeah, it's
Bismillahirrahmanirrahim. So today, inshallah, we will be studying flow through taxation that starts from Article 16 of the Corporate Tax Law. The topic is unincorporated partnerships. What do you know about unincorporated partnerships, Muhyiddin?
this chapter I've never come across, by the way. This is the first time.
Okay, so as the
Mhm.
name suggests, two words are there, unincorporated and partnership. So
Mhm.
I'm sure you must have heard something about partnership, the second word,
Yeah,
right?
true. Yeah,
What is
yeah,
partnership?
yeah. Partnership is when you have a two other person joining together and starting a business.
Yeah, correct. So,
Mhm.
usually in various countries of the world, people
Mhm.
can simply drop a contract, right, on a piece of paper.
Mhm.
They can drop a contract. They can say that, okay, these are the terms and conditions, etc., etc. In certain countries like in India, in Pakistan, they have a registrar of partnership firms. You must have heard. So sometimes those kind of partnerships, they are notarized, and
Mhm.
then they take the partnership deed to that registrar, and they say, can you please register our partnership? So that partnership is registered. It They are given a kind of a trade license, that is, this is a registered entity. It's not a company but a registered entity. Now, the from a law perspective, business law, commercial law perspective, you should understand something, that this type of a partnership firm, it is also called firm. So this type of a partnership firm does not have a legal personality like companies. You know, companies have a legal personality, right? What-
I'm sorry, I didn't hear that question. Can you repeat again?
Yeah, I was saying that these type of partnerships that are formed on a contract partnership agreement, they
Mm-hmm.
do not carry their own personality like a company
Yeah,
does. You know that, right?
yeah, yeah. Of course, yes, yes.
Right. So if they don't
Because
carry,
once you form once it's become a once it's become a partnership form,
Mhm.
if anything happens to the company,
Entity,
it's
use
on the
the
company, not on the individual names.
no, no. That's why I always say, if you are becoming a tax practitioner, choose the right word. You just
Okay.
use the word in your sentence, company.
Mhm.
That's the whole funda. That's the whole point. A partnership is not a company. Company has a separate legal entity of its own. You can use the word entity. You, what you wanted to say was, when a partnership is registered and there's a trade license that is issued, then it becomes that entity can have its own personality. That's what you were saying, correct?
Correct.
You know, I'll tell you something. In those countries where such registrar of partnership firms exist, and the law is also there in force, like the Partnership Act in India. Actually, this act is, I think, 1922, before partition. So it's an old English act, actually. So that law, I think even today it is governing in these countries. So in that law, it is clear that this partnership firm, is it does not have a legal personality of its own. Now, in UAE, what we usually refer to as partnership, for which there is a trade license, Muhyiddin, that is actually, the full name of it is partnership company. So
Hmm.
I would invite you to do some research on that, maybe use Google or other chat GPT, etc., and try to
Hmm.
find out if there is an actual trade license available anywhere. If you look at that trade license, or if you ever get your hands on a memorandum of that type of entity, which is called a partnership company, or sometimes it is called general partnership or general partnership company, which is registered with Ministry of Economy in UAE, DED or otherwise, It is actually a company. In the memorandum of association itself, it says that this is a company. So whenever an entity becomes a company, then
Mm-hmm.
it assumes legal personality. So the interesting fact in UAE is that even if we use the normal nomenclature partnership, uh, and when we look behind the veil, behind the curtain, we'll find that actually the memorandum has granted it a legal personality, and the law has also granted it a legal personality. That's why it's called a partnership company or general partnership company. This is different from India, Pakistan, UK. So there we have the traditional partnership. This is here UAE is an exception. In those countries we have traditional partnerships as well. This difference you should clarify first of all, because if it is clear, if this difference is clear, then it automatically explains the first word in of the article, unincorporated.
Okay.
Do you get my point? A
I get
partnership.
your point, but I just want to clarify one thing. Like, you're saying to for me to, do my, I mean, kind of understanding about the partnership itself. And do we have something called partnership license, by the way? There's no specific as such, right?
Yes, no,
In
no, no.
UAE.
In UAE, in Ministry of Economy, in DED, in Abu Dhabi, there is a trade license called General Partnership and Partnership Company, it is also referred. There is a trade license that is issued. You will see the words written on that trade license, General Partnership or Partnership Company. These words are written there, and you can check
Mhm.
in the company law of
Ins-
UAE as well. You'll find
Instead
that.
of LLC, it will be partnership company.
Yeah, the word company will be written there, partnership company or general partnership. But even if it is written as general partnership and the word company is not written, what do we do as practitioners always? Where do we look for the answer?
In the memorandum, that's all we
Memorandum.
find it. Yeah.
100% correct answer. We always look for this answer in the memorandum. We
Hmm.
look into the personality clause, and there you will always find the answer. And the answer is that partnership, no, first of all, this type of a license exists, and it's a very frequently available license. You may not have seen it, but it is very frequently available. Okay, so is this point clear?
Yeah.
Okay, now does the full name make sense now? Unincorporated partnership.
Yeah.
No, I don't think it does. You're still not clear. Let me give you an example. You and I can meet in Starbucks today. I will bring a
Uh-huh.
blank paper and a pen, and I
Uh-huh.
will draw up a partnership contract between yourself and myself, and we'll call it
Uh-huh.
Altaf Muhyiddin uh,
Uh-huh.
partnership, or what, general partnership. Okay. Now
Uh-huh.
the contract is written. Now we will sign the contract. Both of us will
Yeah.
go to Dubai courts, Al
Uh-huh.
Tawar Business Center. We'll go
Uh-huh.
there. We'll say that we'll meet a notary public. We'll say, can you please, this is our partnership agreement. We have agreed to form a partnership. Can you please notarize this, register it? They will do the needful. There'll be involvement of Dubai courts. Maybe a judge will hear us. Did you form this partnership? Yes, sir, we did, etc., etc. And then it will be properly notarized, and it will have a court endorsement or backing. Did we go to Ministry of Economy?
No, we didn't.
We didn't go to Ministry of Economy. We didn't go to a PRO. We didn't go anywhere.
Mm.
No free zone,
Mm.
nothing.
Yeah, we just went straight to notary to get the
Partnership agreement notarized.
agreement. Yeah, notarized. Yeah.
Do you think an unincorporated partnership has been formed?
Yeah, with this notary, it should be formed.
Yeah. Even without a notary, this can still be formed. I'm telling you this.
But
Partnership.
how?
Yeah.
But it does not have any clause for unincorporated partnership. It does not have any mandatory regulation uh,
Yeah.
to
So it
be.
is. Yeah. I'll answer you this. So this is this type of a contract or agreement. See, we need to understand the contract law for this purpose, the basics of the contract law. Different
Mm-hmm.
versions are there. In India, pre-partition, FD, FD, Federal Doctorate wala, FD. FD Mullah was a law, he was a legal expert and he drafted the first version of the traditional contract law, the law of contract. Okay. And
Mm-hmm.
in that law, it defines the basic elements of what a contract is. Okay. And that law, in its different shapes and forms, is accepted around the world. There may be other laws in other parts of the world as well. But all of those laws, the fundamental laws of contract, they allow any two persons to enter into a contract. You agree with this? Any two person living anywhere in UAE, you and I can do a contract. Okay, I will. Yeah, this is a contract. What we are doing right now. You're studying, right, with me. You have paid a
Yeah.
fees or whatever. So,
Mm.
do you think there's a contract established? Yes, because
Yes.
in order for a contract to establish, even if it is not a written contract, there has to be an express offer. I made an offer, you accepted it, or you made an offer, I accepted it. And one of the elements is a consideration. Do you know what is a consideration? Consideration means a price. There has to be a
Mm-hmm.
price, and there has to be an exchange of value. So the price is there in this. The exchange of value is there. The fact that we are studying right now, that's the
Studying right now. Yeah.
value that I'm giving. So all elements of the contract are there. So forget about this. You just go to ठेले वाला छाबड़ी बोलते हैं ना. If you go to a simple street hawker and you just
Mm-hmm.
pick an apple from that street hawker and start eating, do you think a contract has been entered?
No.
Yes. Surprised?
But how is the contract entered if there is officially not a
Yes,
mutual?
yes. That's why I wanted to raise these matters so that your concept is cleared. Do more research on that in your own time. You'll be surprised to understand how different modes of contract are there. Okay, yeah, there are many things that you will find out. Even this is a contract. Why? Because there was an implied offer. So we
But
call it.
aren't we talking about unincorporated partnership is basically two person agreeing to a contract, right?
Correct.
Two
Yes.
person.
Yes. So
But in terms of what you, yeah,
huh, no, no, complete.
in terms of what you said about this apple, somebody just walking to a shop and just taking the apple and eating,
Hmm.
and there is no agreement between two persons, right? If he pay the price and then he says he takes the apple and eat, it's a different case.
No,
This is
no,
something.
that's what I'm trying to explain to you. The in a contract, what did I say? There are, there has to be an offer, there has to be an
Mhm,
acceptance, there has
mhm,
to be an exchange of values.
mhm.
Correct? So,
Correct.
this type of a matter has been brought into courts of law of the world many times. So, uh, the implied offer was already there, that
Mhm,
he had apples displayed openly for people to purchase. You just
mhm,
went there and he did not stop you. You picked up the apple. So you basically accepted the offer when you took the first bite. Now the contractual obligation of paying the money has been established on you. Am I right? And in
mhm,
99 out of 100 cases, a person would not, quarrel about it. They will pay the money because everybody knows, what has happened. This person has simply accepted that implied offer, started eating the apple. That means now he has to pay the money. Contractual obligation is established. So this is the concept of a contract, my dear. So, but anyways,
This is
yeah,
this is one of the
examples,
contract which okay,
one of the modes. But a
okay.
formal, proper contract happens on a piece of paper at least. Now, digital time is there, paper is outdated. So, and of course, I
Mhm.
mean, medium has to be there. In old days, it was paper. Now, new days, PDFs are there, digital contracts are there, etc., etc. The whole point is that the offer is the original elements of the contract are still there. Offer is there, acceptance is there, exchange of values
So
and consideration is there.
so
So
this form is also a kind of a legal form. I mean, unincorporated partnership, forming an unincorporated partnership is also a kind of a legal form. It's
yes,
not something.
it's a legal event, yes, or a legal arrangement. Correct.
Mhm.
It's a legal very much. No, a court is involved, my dear. Don't you think this is legal?
No, yes, indeed. Like, do we propose somebody to do that? That's the question. That's the point I'm coming to. Then
Uh,
there is the, yeah.
propose meaning notarize.
No, I mean, no. Do we advise somebody? Okay, you can have an a mutual contract between you guys and get it
They,
notary.
I will
No.
never say no to any possibility. There is a reason. We can't imagine the scenarios, all the scenarios of the world. There may be trillions of scenarios. So we cannot predict anything. Right now, do we need what we are doing right now? Is this a business transaction? Yes, it is a business transaction. Should we always go to notarize this and write an agreement and all? No, we don't. Hundreds of contractual arrangements can happen without notarization. Even a partnership can happen without notarization. That's what I'm trying to explain to you.
Okay, but I'm talking about in terms of safety and security, which is the best form I'm
Ah,
talking about. Why?
of course, that you have a
Okay.
point there. Safety and security, yes, but I'll tell you another angle. So that's why we do research, na. So if someone has, if two parties have entered into a contract on a blank piece of paper and they did not go to
Hmm.
a court, right, to
Hmm.
notarize it,
Hmm.
first question will be whether a contract has been established or not. Partnership itself is a contract. So first question will be, is there a contract? What is the
Hmm.
answer? You simply use process of elimination, you'll get the point. So my first question is there a contract between these two or not? So the answer is yes, there is a contract. They
Yes.
have signed a contract, right?
Yes.
Yeah. Is there any doubt on that?
No, no doubt.
Yeah. So first point is contract has been established. Second question, is this a partnership agreement under the old partnership law, or even the law of the contract? Yes, it is. Two people have agreed to exchange values. So they are into an arrangement called partnership. So yes, there is a contractual obligation, various types of contractual obligations. Both of us are going to introduce our capital, or one is going to introduce capital, other one is going to introduce capital in kind, meaning by effort, right? Mudaraba arrangement. So it can happen. Have you
Hmm.
heard about Mudaraba?
No, no,
It's a legal form of partnership in which one party comes with capital, money capital, other party
no.
comes with skill, and they
Hmm.
enter into a partnership or a legal arrangement, business arrangement. One party performs the business actions, other party is like an investor, passive investor.
I have an idea, but I need money. You have money, so we can join together to do the business.
Correct. So yeah, so that exactly. So that is also a different type of partnership. But the whole point is exchange of value is there, right? Exchange of value. So that's how even that's what I was trying to tell you, that an unincorporated partnership can even assume the shape of a simple not notarized contracts, unnotarized contract between two people as well. Okay.
Okay.
Any other question on that? Now the mind should be clear that what exactly is
Yeah.
unincorporated partnership. Okay, fine. What is unincorporated partnership? It is a relationship established by contract. Where does it say notary? Nothing. Simple point, a relationship established by contract between two persons or more, such as partnership or trust or any other similar association of persons. Now, the last words, association of persons, is very interesting and important, because if you, when you go back home sometime, or even you have time later on and you want to have, for just for fun, you want to do this research, an interesting thing you will find in the individual or business tax returns of India as well as Pakistan, that they have a type of taxable person called association of person, AOP. Have you heard this before?
Association of person.
Yes. In
Um,
India, actually, it was there in Pakistan also until 1979 law was enforced. Latest, I don't know. But forget association of person in India's tax returns, business tax returns, income tax returns, there is even a taxable person category for HUF, Hindu undivided families.
yeah, yeah, yeah.
You heard this? So
Yes, yes, yes.
HUF, an association person. This Hindu undivided family status was even there in Pakistani tax returns, income tax returns. When I started chartered accountancy, in those days, this status was there. Latest, I don't know. But what
I
I'm
mean,
trying to tell you,
are you referring to both Hindu undivided family and association of person is almost the same or different?
almost the same, but Hindu undivided family may have a slightly different
Specific
orientation. It's more on the family, like the concept of family foundation that we are
specific
going to read.
category. Okay,
Yeah,
okay,
it's a family. Understand this, that the word family is important here. So there is kinship between the members. Okay. And
mhm,
it goes to fourth degree of kinship. I don't know, I haven't read the Indian income tax law, but chances are that if it is anything aligned with the OECD or other international law, then the Hindu undivided family might have a level of kinship similar, fourth degree, but I don't know, I can't confirm that. But there will be kinship, blood relationship or adaptation or something, always in in any structure of family, whether it is Hindu undivided family or the family foundation or the family offices here in UAE. Families, the Gargash family, Majid Al Futtaim, and this and that, Al Nabuda. These are all family wealths. Okay.
okay,
So, what I was talking about was association of persons. Actually, this is the superset. The word partnership is a category of association of persons. Hindu undivided family is also a category of association of persons. And there are certain structures in the world like trust. This is also an association of persons. And you'll be surprised. Now you'll be able to connect many dots. NGOs you've heard about, non-governmental organizations, welfare.
yeah, yeah.
They
They
are,
also a trust, right?
yeah, exactly. They are
Mhm,
also a type of association of persons. They may have different tax treatments and conditions,
mhm,
but in the end, this word actually, association of persons, this word
mhm,
is bigger than partnership actually around the world.
mhm.
Okay, so partnership is a type of association of person actually. But anyways, in the UAE law, the order has been reversed. So unincorporated partnership, one category has been, so one example has been given as any similar association of person. Now, sports entities or clubs or welfare, all of these are association of persons. Okay, so trust, when you see, do you know what is trust? Any idea about what exactly is trust and trustees and beneficiaries?
No, these are different terms that I've heard of, but I've not. If you
Okay,
ask me to explain, I
okay,
don't think I can.
no problem. So, trust is a welfare entity in which, what is the literal meaning of the word trust? Uh, Amanat. Have you, do you, yeah, you know that, right? The,
The bottom line is to run a trust without non-profitable income,
yeah,
right?
not necessarily on behalf of others. Let's put
Ah,
it that
okay,
way. So trust
okay.
can be for profit as well. It can, unless the law stops it, the very concept of trust does not preclude running affairs that are commercially profitable. So there can be a
But here
trust.
in specific, it is right. But here in specific, it should be
Here,
non-profitable, right?
as per law of trust, the trust is prohibited from carrying out, making profit for trustees and all that. Chances are that even trusts here can do activity, but on behalf of beneficiaries. The trustees cannot benefit from that. Trustees are the basically the governors, the showrunners of the trust. Okay, and who appoints them? The members of the trust, the beneficiaries, all of, there are appointment. So think of it this way: you have a family, for example, or
Hmm.
you have a extended network of friends, and you say, how do we support each other?" Yeah, let's form a trust. Okay, so we are many, we are 100 friends together. What will we do about the trust? Look, let's identify three, four people whom we trust as the most honest and very professionally, capable people. What we will do is we will make them the trustees of our trust. So they will run the trust on our behalf. They will take the decisions and they will consult us before taking. So money was of the entire group of friends, 100 friends, right?
Mm-hmm.
And they appointed only three, four people to run the affairs in line with the wishes of the beneficiaries, right? So
Mm-hmm.
they are called trustees. So whatever
The one
decisions
who,
they take, they must not be only in their own self-interest, but in the interest of the beneficiaries. Does it make sense
uh,
now?
so they earn income out of that.
They
So those
they may be
trusts.
compensated only to the extent of some salary income or as much income as the ultimate beneficiaries approve.
Okay,
They
so
are
the
not
one
the
who
owners
operates,
of the trust.
so the one who operates, I mean, if my term is correct, one who operates is called as trustee. So they
Correct.
are, okay, they are like a working employee, so they might get in form of salaries
They can get
and
salaries.
compensation. Yeah.
They could even get a share of the profits if all the beneficiaries agree. But the whole point is that they are not sovereign. They are not absolute. They are bound to honor the wishes of the beneficiaries. They are bound to, take approval from them. Okay, like this way they will operate. So, anyways, so that's the concepts of partnership, trust, and then association of persons in accordance with the applicable legislation. So, just for your knowledge, in the
Uh,
mainland, the law of trust is there.
mhm.
Now, how did the trust come into being? That's a question we should ask, right? So, in Europe, in UK particularly, because there are monarchies, there are many monarchies that have been out, 700, 8 years, 100 years old monarchy. In those jurisdictions, the UK tax trust law is one of the oldest, I would say. And there has been transformations into that law, but it that provides a historical overview of how trusts act and what trusts legal capacities are, etc. So that's one of the most practiced or followed laws on trust, the UK law on trust. So if you look at the UK law on trust, you will find that it has many characteristics which are similar to unincorporated partnerships. Like, for example, trust in UK, the original trust law does not give or award a separate legal personality to the trust. So, in other words, a trust in UK is also unincorporated. Is this point clear? Does it make
Or
sense?
trust can also be an unincorporated trust,
What are you reading right now? What is the heading you're reading?
unincorporated partnership.
Such as,
Is partnership or trust or any other similar
does it,
association of
do you
person.
get it? Trust
Yeah, I
is
got
a
it.
type of unincorporated partnership.
Yeah.
It is unincorporated. Okay. But now, to your surprise, you open the main law in UAE,
Mm-hmm.
mainland law on trust. I think 2023 or 21, either of the years. The law of trust. You will
Mm-hmm.
find a surprising clause there. It says that the trust in UAE mainland will have a separate legal personality. Surprised? While
But
the rest of the world, trusts don't get that advantage. They don't have a legal personality. In
right.
India, no. In Pakistan, no. In UK, even no. But here in UAE, again, a big exception was created. Under the law of trust, when a trust is formed under the federal law of trust, that trust is actually a body corporate. The proper legal way of saying it is body corporate. Remember these words. Okay.
Mm-hmm.
So that trust is a body corporate. It's a corporate body. with a separate legal personality. Now, if it is a body corporate, then the question should be asked why the hell this thing is brought under an unincorporated partnership,
Exactly, that's my question too.
right? So
Hmm.
the answer to that is exactly the same. So again, a trust doesn't have to be formed under the mainland law. A trust can also be formed just like a partnership on a piece of paper. You don't even may not have to, you may not even have to notarize it. But that will be a very private arrangement, although it is still a contract. Remember, see, that's where the contract law comes in. And by the way, for your information, the entire law of contract in UAE, the mother law, there is a mother law. That mother law is called Civil Transactions Law of UAE, 1954, I think. So, have you heard this? Civil Code or Civil Transactions Law? Have you heard this
No,
name?
no, no, no.
So, remember this name. This Civil Code or Civil Transactions Law is the absolute mother law of transactions, commercial transactions, or whatever happens in UAE. That law is the mother law. So it addresses many things. It addresses the basic contracts, contractual arrangements that happen, what happens if the breach happens, all that, right? So
Hmm.
this trust, if it is formed as an unincorporated partnership, that will be governed by the law, the civil transactions law of UAE. Do you know what other things will be affected by that law which are not governed by any other law? You
What was that?
remember the Apple example? You went to a street hawker, started eating apple. That
Yeah.
action is governed not by the company law, not by the corporate law, not by the notary or the Dubai courts, direct notarization by the Dubai courts. No, that law, that action of yours will be governed by the civil transactions law in UAE. You remember our example of Starbucks, that you and I went to Starbucks and signed up a contract. We did not go to the notary, but or
Mm.
we decided not to go. That contract is governed by the civil transactions law of UAE.
Even
Now,
then, there is no not free, but still it will be accepted as a partnership,
agreement. Yes.
unincorporated yeah,
Yeah.
agreement.
It will be called an I'm just making up this name. It is an unincorporated, unnotarized partnership. Okay, but it is still a partnership.
But I'm getting surprised with this unincorporated with a lot of there's no, there's nothing, there's no. I mean, if two-person has decided to, go on a mutual contract, then it's become an unincorporated partnership agreement between two of them. And if there is anything happens
In
in the
UAE
future.
courts
Hmm.
and in other courts of the world,
Hmm.
there's not one example, maybe thousands of examples of such plain paper contracts being enforced by the courts of law. For your information, do some research and you'll be surprised. If you are surprised, I am not,
But
because I have
but
studied contract law again.
again, coming to understanding of this unincorporated, how it can be formed. But as as an advisor, do we really propose anybody or anybody come? Let's say a layman comes and
As I
ask the
said,
questions to us. Hmm.
as I said earlier, we don't know what circumstances are there. Generally, as a default, if any client comes in, usually we are going to
Hmm.
always advise the client, no, yeah, protect yourself, get it notarized, do the right thing, do the formal thing, at least get it notarized. That's what we will say as a practitioner, right?
To an extent of the safety and security. All right,
Yeah,
got it.
correct, correct. But if the circumstances can change, there may be reasons. Maybe the two
Yeah,
guys that are entering into partnership are shady, right?
yeah. When the money is
They don't,
involved in it, obviously, yes,
they
yeah.
don't want to go to the court. Then, so are we going to tell them, no, 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 if you don't go to the court, you will not be able to. We can't say that. The circumstances command our advice. It's as simple as that.
Okay.
Our default advice will always be the right thing, the formal thing. If I'm there, I would advise form a partnership company if you have the money. If you don't have the money, then at least get it notarized in a few
I'm
hundred.
also surprised that this unincorporated partnership does not have any limit to who can form a partner. An agreement on an unincorporated contract. For example,
Is there, no, no, hold on, hold on. I am going to ask you a very simple thing. Is there any limitation on who can buy grocery from a shop?
of course, no.
Yeah, or ride a bus or any other thing, rent a house. There is no, see, this is life, and all discussion that we are doing law. There's a famous saying, law is common sense, right? Law is
Mhm,
common sense. So whatever actions we do on a daily basis, the calm wali that comes to our house for cleaning purposes, that is governed by civil transactions law. Bhai, these are contracts, actually court enforceable contracts, although they're not written anywhere. You are worried about that piece of paper being unenforceable. That calm wali can sue the hell out of me. You understand? These are
okay.
enforceable things. So forget about the page. Definitely is enforceable.
Okay.
Even those contracts which are not even on a page, on a piece of paper, they are enforceable. Okay.
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 Anyways, moving forward,
Yeah.
tax treatment of unincorporated partnerships. An unincorporated partnership shall not be considered a taxable person in its own right. That's the default treatment. When we form this type of a partnership, unincorporated partnership,
Mhm,
by default, it is not a taxable person. Okay, but they are doing business. You and I entered into the contract of whatever, and we said, okay, let's start a tax firm, right? Let's start a tax practice together, right?
mhm,
So now that's a partnership firm. It's legally enforceable
mhm,
partnership firm in the code of law, and we are doing business
mhm,
together. Yes, we cannot open a bank account. Law does not allow it here, but
mhm,
we decided, okay, forget Khalli Walli bank account. Let's take cash.
mhm,
So we've started accepting cash. So partnership firm has starting making money. How will it be taxed now? The question, yeah, should it be taxed as a partnership firm, as an unincorporated partnership, or is there a different treatment? Though the answer is that according to the Ministry of Finance, who've drafted the tax law, this unincorporated partnership in itself by default, and remember my words, by default, is not a
mhm.
taxable person. Okay, unless it is a juridical person. Now, what the hell does this mean? Unless it is a juridical person? Can a partnership be a juridical person? You know what is juridical person, right?
Yeah, but why do you say in specifically like a juridical person like?
No, I'm not saying, the corporate tax law is saying that an
Mhm,
unincorporated partnership cannot be considered a taxable person unless it is a juridical person. So that was my question.
ah,
Can you think of a situation where a partnership, and I've removed the word unincorporated, where a partnership becomes a juridical person, meaning a body corporate? Can you think of a situation? Have you heard about LLP or
limited
LP?
liability partnership.
Yes. Have you heard about it?
Yeah, limited liability partnership, but I've not. Yeah, limited liability company and partnership is almost the same, right? If I'm not wrong, here in terms
Exactly.
of UAE, right?
Yes. So
Yeah.
that general partnership you were talking about,
Mm-hmm,
it is a partnership, it is a
mm-hmm,
company.
mm-hmm,
But the problem is that it maybe I haven't seen the memorandum yet, but
mm-hmm,
chances are that it is not a limited liability partnership. It's an unlimited liability partnership. There is a possibility, but the problem is that if it is an unlimited liability partnership, then that's a clash with the fundamental concept of a company. The whole idea of a company or a body corporate is limited liability usually.
mm-hmm,
So we have to see whether an unlimited company exists, meaning it's a company, but the liability of the owners, shareholders, partners is unlimited. That may be a very rare scenario. But to make things easy for you to remember, just focus on limited liability partnership. That this juridical person, the biggest form that this takes is an LLP. In DIFC, in ADGM, they provide for LLP structure where two or more partners come together and they form a
Mhm.
partnership called a limited liability partnership.
Mhm.
And the fundamental concept of a body corporate stays intact. What is that concept? That the liability of the owners is limited to the extent of their unpaid capital. If they had agreed that we will pay 100,000 dirhams, they paid only 40,000, and tomorrow company goes bankrupt and creditors come, then the partner has to pay the remaining 60,000. Uh, Even if the creditor's claims is 10 million dirhams, that partner will only pay his 60,000 that is remaining on his capital account. That's the concept of limited liability. Don't you think that's a good thing for the owners or partners or shareholders?
Of course, yes.
That's why people tend to form companies. Because when you
Mhm.
form a company, let's say you and I are shareholders, 50-50% shareholders in a company. And
Mhm.
tomorrow that company, we want to do a fraud with some banks, and we took a loan, for example, big loan, 10 million dirham loan. And we had established the company, we had assets.
Under the company name.
Sorry.
Under the company name. The loan was taken under the company name.
Loan was taken under the company name. And we then, we were here, we did not abscond, but we were here. And we created, very intelligently created circumstances where we were in a position to declare bankruptcy. We declared bankruptcy. Now the bank came after us, they sued us. And but will the bank be able to sue the owners, shareholders? No. The bank will only be able to sue the company. And the company has gone bankrupt. All the assets were sold, but out of 10 million dirhams, the bank only recovered
But
1 million dirhams.
this is to an extent of 99.9%, right? Not 100% that it is completely on a company, correct?
What do you mean?
I mean that I mean the
Company goes
companies
bankrupt.
become insolvency and they have to yeah, the company is become insolvency and they have to
So,
make the
uh,
repayment and they don't have money.
so the real
And to
world,
an extent of only 99. Yeah.
yeah, yeah. Real world is very different from theoretical world. In the real world, when a company goes to take loan from the bank, as an extra precautionary measure, they ask for personal guarantees of the shareholders or directors. So
Uh,
when you give personal guarantees, you become party to it, right? So if there is a bankruptcy situation, then even the shareholders will be caught. So that's the
the
real
bank
world.
is even more precaution in terms of like they don't only give loans just like that by the company's credibility. They also secure themselves by
Course,
asking
of course.
extra
Of course. There
that
are hundreds of variables to that. So we are basically addressing the fundamentals right now. But when we talk about the real world situation, yes, the actual lending process is very
okay.
tight, very stringent. It's the bank. Banks are those monsters who, if when they pay 100, they sign up or write up 200 dirhams of collateral. They're those kind of people. So, but still, too many
Mhm.
defaults happen. So, but anyways, we'll not go into that right now. So you got the idea of a juridical person,
Yeah,
a
sure.
limited liability partnership, right? Okay. So an unincorporated partnership is not considered a separate
Yeah,
taxable
yeah.
person that we discussed unless an application is made to FTA. Do you get this point? No, okay. Before I talk about this sentence, let let me
Mm,
ask you a question.
mm.
What did you understand from this entire sentence? So every partnership will not be a taxable person, or some partnerships will be taxable persons.
So they will be a taxable person, right?
Who? What are you saying? An unincorporated
Mm.
partnership is a taxable person. भाई क्या पढ़ रहे हो? An
No, no,
unincorporated
no,
partnership shall not be considered a taxable person. बड़ा बड़ा लिखा हुआ है, right?
no, no. That
The,
point
the
I
de-
understood.
default
Your question that you're asking.
the default treatment is
Mhm.
that an unincorporated partnership will not be considered a taxable person. First thing we should remember, right? That point is known, na? Agreed?
That point is clear. Yeah.
That point is clear. But there was an exception to the general rule, unless it is a juridical person. What does that mean?
There's a special request given to the FTA for.
No, that we didn't reach that point. We were still in the first part. If it is a partnership with a juridical personality, then it will be a taxable person. That's the meaning of it. Meaning a limited
Can you
liability
repeat?
partnership.
Can you repeat again, please?
If it is a partnership, but with a
Mm-hmm.
limited liability, meaning it's a juridical person, meaning it's an LLP,
Mm-hmm.
then this is the exception to the general rule. Then that LLP will be considered as
Taxable person
taxable person. Why? Reason?
because it's a juridical person. All right.
Exactly. Because it's a juridical person. Now, if this point is clear, then let me ask you this question. If it is a trust formed under the mainland federal law of trust, the default treatment of such a trust, what will it be? Will it be a taxable person or a non-taxable person?
Non-taxable person.
Ah, what did I tell you about the mainland law of trust? Does the trust have a separate legal personality? Is it a body corporate or not? Remember our discussion?
Yeah,
The
it is a
you
body corporate.
It's a body. If it is a body corporate, then isn't it a juridical person?
Yes, it is a juridical person. Then it should be
Then
on the company, on the juridical person.
it should be a taxable person or not?
It should be a taxable person.
Correct. That's what I wanted you to remember. That the key point for us to remember is this.
Okay. Just
If
pause for a second. Just let me just recollect this here. First, body corporate. Okay, got it.
yeah, okay.
Okay.
Okay, now we know the default rule. We know the exception to the default rule as well, right? Now,
Mm-hmm.
an action. First, we understood the default rule, then we understood the exception, but then there is another exception by way of an action.
Mm-hmm.
Sometimes the unincorporated partnership may make an application to FTA saying that, can you please treat us? We know that we are not taxable persons at entity level, but can we apply to be treated as a taxable person at entity level? You understand? So FTA will
But
decide.
but why do I do that is the question here.
There can be commercial logic behind it. There can be. They like they want. Why do people want to register in tax at all? Nobody wants to register for corporate tax actually. VAT everybody does, but is there a benefit of registering for tax?
The only benefit that I see is like maybe I mean in terms of VAT I'm talking about. In terms of registration, I mean if there is no threshold as met or no reason for them to
Hmm.
register,
Okay, for
the one
VAT, what is the
particularly
benefit? What is the benefit
yeah
for VAT?
yeah probably if they I mean if in case that there's a lot of expenses they want to reclaim the
Refund of
uh,
input tax.
yeah that could be one reason.
Is this
Second
the
is
only
to have a
benefit?
credibility.
That's what I wanted to
Credibility.
hear from you.
Yeah, yeah.
Credibility. I may have a client. I have more than one client who've cited this. Because naturally you should not talk about the confidential affairs, but
Mm,
they are worried about verification of their uh, company in UAE.
mm,
They have a major, transnational client in the pipeline. And do you know
mhm.
what is happening? The challenge that transnational client wants to verify them. And the requirement, one of the best requirements they have given is, can you provide us your tax registration certificate with whatnot, with phone number and all that. So
Exactly.
tax is a it plays a vital role of credibility. So unincorporated partnership may want to have a tax registration number, even a corporate tax registration number as well, in order to get that reliability. So that could be one of the reasons. Does this answer your question?
Yeah.
Okay, let's go forward. Instead, each partner is treated
So
as
the FTA will approve. FTA will approve, right?
no, that's it's a request. This is FTA's discretion. I
But
can't think of a reason why they would disapprove, but I, I, I mean, the usually FTA declines an application for usually one reason, GAR. GAR means General Anti-Abuse Rule or
mhm.
Anti-Avoidance Rule. So if there is an angle of tax avoidance involved, only then FTA may decline. And I can't immediately predict what could be the reason for tax avoidance in that scenario. But all I'm telling you is the general, reasons behind FTA's rejection. Usually it will be
So
GAR.
basically, you should have a concrete justification in terms of applying for it, and it's FTA decisions to approve it or not. That's it.
Honestly, in practice, in all honesty, in practice, FTA does not even want ask for that, and usually it may give approval. I don't,
Uh-huh.
99 out of 100 cases FTA might approve. They don't care. Anyway, either ways, tax is coming to them. So they'll say, okay, fine.
Mhm.
I mean, doesn't matter. Unless they can see a reason, which is a
Mhm.
very rare circumstance. So usually people, these unincorporated partnerships will, chances are they will get the approval. Okay.
Okay.
Instead, instead, each partner is treated as a taxable person for corporate tax purposes. So what does that mean? Meaning, if we are not taxing the partnership itself,
Hmm.
we have to tax someone. Who are we going to tax then? FTA is going to tax whom? The partners themselves, right?
Okay.
Yeah, they are running a business, correct? Yes,
Hmm.
check. It is a business. It's a commercial activity, correct? Yes, check. It's a commercial activity. Uh, and if they have obtained a trade license, even better. Like, or if it is a trade license is there, then for sure, I mean, they have to do it. And I'm not aware of any other law of partnership in UAE. If you come across any such law, do share with me, which is other than the usual partnership structure that I mentioned. So, but the whole point is that if this situation comes in, unincorporated, the name itself is very clear, unincorporated partnership. So, if in that scenario, that individual partner will have to file their own corporate tax return. So, instead of one, there will be two TRNs for each of the partner. So, they
Yeah,
will.
but here it becomes very challenging for even for the FTA or for anyone who wants to file a corporate tax. The tracing of this information or 100% is accurate. How do we file with correct
Oh, so
numbers?
it's common sense. It's not that difficult as you are imagining. So you have
Mhm.
you and I opened that
As you
form.
see, you and I know that nobody is willing to pay taxes in general terms. So if that is placed for everybody, like everybody thinks the same way, why would an unincorporated person would put himself in a position to pay taxes, even if he's willing to pay taxes? And how do you trace that information is when you're
TRN,
filing
why
is
TRN? Credibility. You're right that nobody wants to pay tax. So if a person does not want to pay tax, they are simply not going to go to FTA. And there are loopholes in the law, gray areas in the law as well. Like when you read the
yeah.
ge- what was that? The general guide, if I remember correctly, as well as the guide on partnership. FTA has issued 24 guides. Yeah, okay, for various each guide is like bloody long. Some guides are 100-page long, some are 170-page long. Very big, seven or average size 70, 80, 90 to 100 pages long guides they have issued. So in one of the guides they have actually mentioned there that an individual, you and me, natural person,
Mm-hmm.
who has a trade license, like a sole establishment, right? That sole establishment is treated as a natural person who
Yeah.
operates under a trade license. The key word is trade license for us to remember here.
Mm.
And if that person conducts a business activity under the trade license, then he has to register, otherwise not. Remember this point?
Yeah, a threshold of 1 million. If there is,
1
they
million
have
and
to
all that.
register.
So
Yeah.
that this is a gray area then. Like if two individuals have formed an unincorporated partnership, the first question will be that, how the hell will the license be issued for that?
Yeah, exactly. How do they
Because if
register
you,
themselves? If
because it's a gray area. So if you want to have a license issued, you are going to go to Ministry of Economy and they are going to give you what answer? Yeah, you can get a general partnership license. Oh my God.
Mhm.
So the general partnership license is a company.
Yeah,
Yeah. So
and there's
yeah,
a lot of procedures to be that, and there's a
yeah.
lot of payments to be done to get
Unless,
the license.
unless, unless you remember my discussion on unlimited partnership or unlimited company. If
Yeah,
that
yeah.
scenario is there, then even if the word company is there, chances are that the legal personality will not be there because it is an unlimited. Why, if the liability of partners is unlimited, then it is no longer a company itself. Then it's an unincorporated partnership. You get my point?
Mm, mm,
The whole point of forming a company. Why was the company created or invented hundreds of years ago in the first place? We should remember this. Why? Why was there a need to create another structure called company, body corporate? Why the whole point of a company was to limit the liabilities of the partners or the shareholders. If the liability is not getting limited, then what company are we talking about? Then what is the point of that company?
mhm.
So these are questions. These are gray area questions. But for you, let me tell you something that these are rare situations. This is not frequent. Okay, and this
Mm,
if even if we are talking about an unincorporated partnership, we'll have to see whether whether any such partnership classifies for treatment of an because partners would usually not even go to FTA for registration. Nobody wants to pay tax, right? But unless in a rare circumstance they think that no, yeah, for our business or commercial logic, it is good to take a TRM. Then yes, they can go. You remember my example of verification and all that, right?
yeah,
So if that scenario is there, they may say, yeah, let's take a TRN for this unincorporated partnership. This way we will be able to get more money. Yes, we will have to pay tax unwillingly, unhappily, but tax is only like
but
9%.
to be really honest, I would be really surprised if FTA agrees to approve an unincorporation of TRN and they approves it, then because there is already article which I'm seeing here, which Article 16 that you're referring here
Yeah.
in regards to this.
Uh-huh.
Uh,
No, no,
I'm not certain.
say again what you just said. To be honest, you'll be surprised at what?
Nah, to be honest, I will be very surprised if FTA approves an unincorporated partnership form which does not have an official trade license, or let's say just a contract, and they're doing a business and they want to register themselves to get a TRN for filing corporate tax or whatsoever. And if they approve it with no other documents, only the contract alone, I don't know how that
You'll
can
be
be
surprised.
done. Yeah.
You okay? Let me ask you some very basic common sense question. Okay, you have started a business, right?
Hmm.
You just opened the shop, and a doubtful customer came to you. I'm not sure if I should buy this from you or not. What will you say?
Hmm.
No, go away. I don't want to give you unless you have a trade license, you have a identity card, and you have all the verification. I will not sell you. Will this be your answer? Or will you try to trap him? You'll try to convince him, no, no, this is extremely good. Buy it from me. Would you like money or not?
Of course, yes.
Yes, correct. Why would
Mhm.
FTA turn back someone and tell them, no, no, I don't want your money, go away? Common sense question.
No, we're not talking about they're saying yes or no. We're talking about there is a procedure towards getting is this, right? So when I don't, for example, if there are like one, two, three checklists, and if I don't have certain things, and why would FDA approve it, by the way? And is there an options where there is in the drop down that you find unincorporated partnership options in the list of like
Think from an economy perspective, my dear. Think from an economy perspective. The economy is gaining advantage because of this action. Think of it. See,
okay, got it. Now I got the answer because it's a revenue for the government, by the way. Why would they
yeah,
say no if somebody's willing to pay taxes, by the way, or they want to register themselves for
yeah, and who
CT? Got
knows? And who knows? Maybe this is the starting point for these people to actually formalize this arrangement later on. That's why congenial environments exist. We want to incentivize you to actually open your business and leverage your business and scale up your business. So if you're coming to us for support that, allow us to be treated as a taxable person, why not, bhai? So bismillah. We'll give you that
it.
because then we think that tomorrow you're going to actually form an LLC. So why not? So anyways, moving forward, instead each partner is treated as a taxable person. We discussed this.
Mhm.
In case of application to be taxed at entity level, so now we're talking about that scenario where people went, partners went, and they requested for being taxed at entity level. So when we discussed, practitioners use a language saying that they have requested to be taxed at entity level. Okay. In case the application to be taxed at entity level, what will happen? Application shall be irrevocable. First of all, remember this. This is the ministerial decision. Okay. The application shall be irrevocable except in exceptional circumstances and pursuant to approval by FTA. So they went to FTA saying that can you please tax it at entity level, yeah, meaning unincorporated partnership level. Once they apply, then they cannot take back this application unless it's a rare situation, exceptional circumstances are there, and even then FTA will have to approve. FTA has a right to reject. Okay, that's the first point. Second thing, the responsible partner shall provide FTA with details of the partnership, or sorry, details of any partner who joins or leaves the. So just like in the case of tax group, you're going to read later. Um, there, amongst those partners, one of them will have to be designated as responsible partner. That partner will be the window to FTA. That FTA is going to talk to him only.
Like a group, right?
Yeah, later on you'll see that in a tax group, one company becomes the representative company or responsible
Yeah, you
company.
need to appoint a
Ah,
person. Yeah, got it.
okay. Partners tax treatment. Now this is again common sense. When a partnership is not a taxable person, we're meaning the default treatment, each partner is treated as conducting the business of partnership, so separately. Okay, each partner is separately seen as conducting the business of partnership, sharing the intention and status of partnership, owning the partnership assets, being a party to partnership agreement in their individual capacity. Is this point clear?
Okay, got it.
And
Individual
common
capacity.
sense will apply. So if there are 50-50 partners, what will it mean? All of these things are 50-50. And I'll tell you
Okay.
something interesting as well. Uh, in those ancient partnership agreements, the Partnership Act 1922, I think, there was a clause mentioned, if I remember correctly. In case a partnership ratio has not been defined in the agreement, share of partners will be equal. That was the clause. So that kind of a condition exists and holds good even today in courts of law. So it is important for partners to specifically and expressly write their percentage of ownerships, percentage of profit, everything has to be written clearly, that what percentage. It is possible that a person may come with money capital, other person does not even invest money capital. Then what? How are you going to decide about how much do you own? You understand? These things have to be clearly addressed in the partnership deed. So
Mhm.
income and expense allocation. Now, assets, liabilities, income, expense of partnership are allocated to partners based on what is the first point? The distributive share in partnership. So distributive share means profit distribution. So if they have an equal profit share, then everything will be half. A Otherwise, method prescribed by the Federal Tax Authority. If the share is unclear, this point clear? Until now, it's clear.
Yeah,
Okay.
yeah, yeah, yeah,
Okay. So
yeah. I get it.
determining the distributive shares of partners in the unincorporated partnership. Where distributive share is not identified, assets, liability, and expense of unincorporated partnership shall be allocated equally. You remember that Partnership Act 1922 that I mentioned earlier?
Mm-hmm.
Is that the same thing being repeated here?
Uh,
Huh?
shall be allocated equally to each partnership.
That's what
Okay.
I said, na?
Mm-hmm.
That in that ancient partnership law, this is what was mentioned. If there is
Mm-hmm.
no mention of the distributive shares of partners, then the profit shall be divided equally.
Mm-hmm.
Deductible expenditure of the partners. So, how do partners deduct their expenditure? When calculating partners' taxable income, partners can deduct business expenses personally incurred for partnerships. So, if a partner spends money for the partnership, for the purpose, wholly, there is a wholly and exclusively test usually that we will read later in Article 20, 20 itself, I think, or
Oh, it's
26, I think.
exclusively for the business purposes only, right?
Yeah, Article
Same here
26
as well.
is, yeah, Article
Mm.
26 is about deductions, allowable deduction, if I remember correctly, or something. We'll see, or maybe 24. But in that article, later on, it says there is a test which is wholly and exclusively for business. So if this business expense was incurred wholly and exclusively for business, then the partner will be able to deduct it from from
Mhm.
his income in partnership. Partners can this is Partners can deduct interest on funds they contributed to partnership. So this is a famous topic of partnership law. If a partner, see, there is a partnership capital. First of all, we should remember that
Mhm.
when partnerships are formed, each partner contributes to the partnership through his capital, correct?
Correct.
But sometimes there may be need of funds. One partner says to the other, man, I'm short on funds and we have to give this amount of money for the interest of this particular project or otherwise generally. So can you please spare some funds? Give Loan it to partnership and we will repay later on. The
Mm-hmm.
other partner says, okay, fine, but I will charge some interest on it.
Mm-hmm.
So that interest is still a deductible expense.
Okay.
Partner can give a loan to partnership and he can deduct interest, but naturally arm's length principle will apply there.
Mm-hmm.
Okay, you
So can
understand
be
what is
interest free also? But not. It can be interest free also. It cannot be.
you are sitting in FTA, tell me the answer yourself. Think from FTA's mind, you'll get the answer. What does FTA want? More money or less money?
Obviously, more money.
And if the partner is not deducting any interest or the expense is not being deducted, what happens to profit?
FTA will earn money.
Huh? FTA will earn money.
FTA will make. Yeah.
Yeah, so why will they object?
Yeah. Exactly. Okay, so that's where that you have this rule for it should be as per arm's length principles.
Arms length
Interest
principle.
cannot be more than
Uh,
certain percent and all
You
that.
know,
Okay.
the predominant reality of arm's
Mm-hmm.
length principle is
Mm-hmm.
that understatement of expenses will be never objected by the authority.
Yeah, yeah.
So
Overstated of
overstatement of expenses will be objected upon. Okay.
Mhm.
Non-deductible interest. Now, this you need, this is a key point. Interest paid by partnership to a partner on their capital is treated as income allocated to that partner. Now, remember that this is, this is different. This is a loan to the partnership. Although there is another angle involved in the original partnership law, Partnership Act 1920, they don't even allow this. In that law, this second sentence is not considered. They don't think of that interest as deductible. But here, if you look at it, here we are talking about something different. This is not loan. This is capital,
Mhm.
the original capital of the partnership. Sometimes a partnership deed can provide that the original capital that the partners have invested in the partnership, there will be, first of all, there will be a certain level of interest that will be charged on that capital. Now remember, that's equity capital.
Mhm.
Okay, but still there is an interest being charged by the partner. Why would that be? Can you think of a reason? See, the reason is hedging. Partners, some partners who are like really, really sharp, they want to hedge their exposure, even if they're starting a partnership, and they say, okay, even our original capital will attract interest. You agree? The other partner says, okay, fine, but my capital will also attract interest. Other says, okay, fine, makes sense. Okay, well, I don't have a problem with that. So both agree that,
Okay.
okay, our respective shares
This
of,
this look this looks like securing
yeah,
yourself to a maximum the
correct.
maximum level.
Yeah.
Street smart.
Yeah. Apparently, it is street smart. But don't you think that FTA or other tax authorities are even smarter?
Of course, yes.
When you read this, you will understand why I say that. Interest paid by the partnership to a partner on their capital is treated as income allocated
Income
to that
allocated
partner. And
partner. Non-deductible ex
makes sense.
non-deductible expenses. Okay.
Do whatever you guys want to do. We don't care, but we will not allow you to deduct this interest. That's the position of tax authorities.
Okay. Ah,
Even that part will be, considered as drawings. It will not be considered as expense.
expenses.
Okay. So, anyways, foreign tax credit. If the partnership pays any foreign tax, it is allocated to each partner in their according to their distributive share. That's an easy one. Business restructuring relief for unincorporated partnerships. So, what is business restructuring relief? Any idea? Sometimes it is referred as TOGC, transfer of going concern or transfer on going concern basis.
Yeah.
What does,
Transfer of concern.
sorry?
Yeah, transfer of going concern. Maybe they want to
Uh,
sell the company or they.
So if there's a transfer on a going concern basis, what is
Mhm.
the tax treatment of that? That transaction is out of the scope of tax. So no
Mhm.
gain or loss is realized if someone sells his business or part of business to another either taxable person or about to become taxable person. So no gain or loss is realized. Book value based transfer is treated. That's called business restructuring relief, right?
This
So
is
if it,
for this rule is for this rule is for this rule is not only for unincorporated partnership, right? This rule is for
yeah.
across. Yeah.
Originally this rule was for companies because
Mhm.
predominant form is the company, right?
Mhm.
So, but it applies to unincorporated partnerships as well. An unincorporated partnership elects to be treated as a taxable person But this will happen only in case of that election, that, you know, treat us as a taxable person. That happens, then tomorrow both partners decide to sell off that partnership to another party, then no gain or loss will be accounted for. If they don't elect, then gain or loss will be accounted for. No gain or loss is recognized for tax purposes on qualifying transfers, regardless of whether partner receives the ownership shares or in exchange or not, and regardless of the tax status of the partner. Summary is that, you know, the two things we need to remember. First, this provision will happen only when the partnership elects to be taxed at entity level. That's the first point to remember, right? And second,
Mm-hmm.
that if they elect to be taxed, then in case of a business transfer, no gain loss will be accrued. Simple. Okay.
Okay.
Foreign partnerships. Now, one partner is sitting in UAE, other partner is sitting in England. A
Mm-hmm.
foreign partnership is treated like a UAE unincorporated partnership if these conditions are met. First,
Mm-hmm.
it is not taxed as a separate entity in its home country. Okay. So, uh, you know, under the laws of England, they don't by default tax it as a taxable person. There also, it is said that, yeah, okay, so this is an association of person, and our tax law says that association of person is not taxed at entity level, but the income from that AOP is taxed in the hands of the partners. That's the law in India. That's the law in Pakistan. That's the law in UK, for example. So if that law is there, and incidentally, UAE law is also the same.
The same, yeah.
Yeah.
Mm.
So if that happens, then this foreign partnership will be treated like an unincorporated partnership. It will not be taxed at entity level, the default treatment,
Mm.
right? And one more condition, each partner is taxed individually on their income share. Yeah, in all countries, it's like that. For an AOP, for partnerships, each partner is taxed at individual level.
Partnership, individual level, yeah.
Individual level. That also is, it must file an annual declaration of compliance with all the conditions. So this is so basically it's called, so that unincorporated partnership does not file a corporate tax return. What does it file? Annual declaration of compliance, that yes sir, we are compliant. First thing is that the this partnership is not taxed in England, because their law is also similar to UAE. It is not taxed
Mm-hmm.
at entity level. It is taxed at the income
Individual
of
level.
that partnership is taxed in the hands of the partner. And the second point is also met, sir, that our the partners are being taxed individually on their income. So this is the declaration they have to file with the FTA under Ministerial Decision 261 of 2024. Clear?
Mm-hmm.
Option to be treated. Partners may apply to the authority to be considered a juridical person and a resident person for the purposes of aforementioned corporate tax for the corporate tax law. So this seems to be repeated, but it's not actually. This is regarding foreign partnership. So although one partner is sitting there, the other is here, or both are there, and they're operating in UAE, so they can apply to FTA to be treated as a resident person. Okay.
Okay.
Okay. Now we come to a different aspect. We discussed that when partnership is taxed at entity level, what happens? And it is seen as a juridical person. Let's read through. Partners are no longer taxed individually for party. So this is that exception, second exception. Remember that they went to FTA for approval to be taxed at entity level, right? If
Mm-hmm.
that happens, if FTA approves it, then will the partners be taxed again on their income?
No, I don't. No, they shouldn't be, right?
They shouldn't be, because that will mean double
Mm-hmm.
taxation.
Correct.
So they will not be taxed. All
Mm-hmm.
partners are jointly and severally liable. This is to normal. This is even partnership law we're talking about. Forget corporate tax law. This is partnership law. One partner is designated a responsible person. That also we discussed. Authorized partner must submit a tax registration application to the FTA. Authorized partner will submit a request for tax registration uh, to register that partnership, obtain TRN, use the official
I think
forms,
all
etc.
questions are answered here. Yeah. Okay.
Yeah. Registration deadlines have
Okay.
been provided in a decision, authority decision number 5 of 2025. Uh, First financial year ended prior to this decision. If you know this decision came in 2025, so registration deadlines depend on unincorporated partnership first financial year. First financial year ended prior to the decision. So they're in their second financial year. Then they should submit the tax registration application before 31st August 2025. But this date is gone, so all of this is bekar. It's worthless. 31st August is
Only the
already
last
gone.
one.
So we
Only
have
the
to
last
read
one.
this. First
Mm-hmm.
financial year ends after the decision, then the default condition. Everyone has this condition, 3 months. Remember, even the new
Mm-hmm.
companies that are formed, they should register themselves within 3 months, right?
Mm-hmm.
From the end of the financial year. But here they say end of the financial year. For companies, it's
This is
not that.
different. Yeah.
It
It's
says
it's it's
immediately after formation, 3 months maximum.
3 months. Yeah. For companies, 3 months
But
once
for
you start
partnership,
the
it's a leeway. It's
at the
a
end. Yeah.
facility
End of the
after
financial.
month end of the financial year. But remember, this is end of the first financial year,
First financial year. Yeah.
not the second. Partnership becomes a taxable person. Partnership becomes a taxable person from the start of the tax period in which application was made, or it can be a future tax period as well, depending on authority. And authority has very unusual answers sometimes, So I've seen certain situations where the registration of a tax registration of a company was approved on 1 May and the date of formation of the company was 30th May. Even that I have seen. Okay.
Mm-hmm.
Okay. Anyways, assets
I
liabilities.
think those are like tech issue. I mean, technical issues could be like
Yeah, but nobody bothers about it because it's, I mean, fine, you doesn't matter. You give us
yeah. As
one,
far as you got it, it's okay. If
there
FTA
we will
approves it,
just
why should I go and change it?
no, no, but even if FTA has given an approval of 1 May, it will not make any difference, na? The first 29 days there is no activity.
Yeah, correct.
Yeah. So
Like if
although
you
it
actually
is
look at the FTA
technically,
certification, and
yeah,
every time you apply
uh,
for it, at the bottom line, they've already put
Ah, exactly. And unnecessary hassle, so people just stay silent. Okay, khalli wali. The assets, liabilities, income, and expenditure of the unincorporated partnership shall be allocated to each partner. This we think by now we know that it will be according to their distributive share. Where distributive share cannot be satisfied, that also we read that the authority will decide how to allocate. Shall be allocated, or sorry, in this case, it shall be allocated equally to each partner. Clear until now?
yeah.
Okay, perfect. So uh, this concept of family foundation, good thing is many of these things we have already
Mhm.
discussed. So it should be a breeze for you, hopefully. Why is this Article 17? That's a question to ask. Article 16 is what?
This is the class I missed, I believe. Yeah, I was not
Article
with that.
16 is what? We just read Article 16. क्या हो गया?
Article 16. No, I'm not able to recollect. I'm sorry. Article 16.
This is Article 16, na? Partners,
Okay.
partners in an unincorporated partnership.
Yeah, Article 16, which I asked. Yeah.
Oh, that's what we read until now, na? For the last
Yeah.
two hours,
Yeah.
we've been reading unincorporated partnership. That's Article 16. So
Yeah. Okay.
why the immediate next article after Article 16 was made specifically for family foundations? There has to be a logic behind it, right?
Mm-hmm.
Do you know what is that logic? option to be treated as
Unincorporated partnership. Oh, so family foundation is is also can be treated as unincorporated partnership.
exactly. A family foundation may apply to the FTA to be
Mhm.
treated as unincorporated partnership, provided that all the conditions are satisfied. What are those conditions? Now remember, we are talking about what? यार
Family
come on.
foundation, unincorporated.
हाँ,
Yeah,
family
family foundation.
बोलो
Yeah,
ना.
yeah, yeah.
So I
Yeah, I'm
should
sorry.
know.
Sorry. Yeah.
Okay. So we are talking about family foundation,
Family
right?
foundation. Yeah, yeah.
When we hear the words family foundation, what
Mm-hmm.
immediately comes to mind? It's a big, purely commercial activity, and the owners are making a lot of money, or something else comes to mind. What are foundations? Falana Foundation, Welfare Foundation, Trust Foundation.
Trust or foundation.
These
Uh-huh.
foundations are beneficial companies, basically welfare type activity, right?
Mm-hmm.
Original idea of the foundation is also just like trust.
It is
I
a trust, right?
Yeah, let me explain to you. So, which came into this world earlier, foundation or trust?
Family foundation, I believe.
No, no. In this
Mm-hmm.
world, in UK, in Europe, old monarchies where you know tax law was born, what in your imagination would have come first? Trust or
Trust.
foundations? Huh? Trust.
Probably trust. Yeah.
Yes. So in the
Mm-hmm.
earlier days, these
Mm-hmm.
trusts are very old, hundreds of years old. So
Mm-hmm.
trust came first. But the problem with the trust was that did it have a legal personality of its own?
It does not have a legal personality of its own. No.
It does not.
Mm-hmm.
Don't you think that's a disadvantage?
Disadvantage too.
Like the wealth of the entire family is entrusted to a trust, and that trust does not even have a legal personality. Tomorrow, if that trust incurs a lot of obligations and goes bankrupt, what is going to happen? The heat or the fire will come to the underlying assets or not?
Yeah, of course. Yes.
It will come to those underlying assets, right?
Yeah.
So, yeah. So there was a
Okay.
huge need felt that th- what if those trusts could be featured with a limited liability? So if something comes, something goes to, happens to the trust itself, the heat or the fire does not come to the underlying assets. Don't you think that would be a great structure?
Yeah, of course. Yes.
Limited liability, na? The whole idea
Yeah.
of limited liability, right?
Liability, correct. A
So
kind of a partnership.
that's why the ministries, Ministry of Finances, governments, they created a modification to the fundamental concept of trust. They
Mm-hmm.
assigned it legal personality and started calling it what word? Bolo?
Foundation.
Foundation.
Oh,
Now you know the difference between trust and foundation.
got it.
So foundation is actually everything that a trust is, with one
Mm-hmm.
more addition,
Mm-hmm.
limited liability, which is a great feature. Okay. So this structure combines a trust and a company.
Mhm.
So it's not only a trust, but also a company. And then
Foundation
this,
is basically a trust in a company, right?
correct, combination of the two. So,
Mhm.
there is regulation involved. In UAE, foundation structure is not very frequently available. Only three places or three registrars offer the foundation structure. Do you know which are those company? Which are those registrars? Let me give you a hint. All of those three are free zones.
All are three are free zones.
They are the
Financial free zones you're
most
talking about?
they are the most famous free zones of UAE in the entire world.
Financial free zone, DIFC, ADG,
DIFC, ADGM, and the third
and
one,
one more. Third one is
give you a hint, it's in RAC. Third one.
crack.
No, but RAC is Asal Khaima. What is the name of that free zone? RAC
Crack.
ICC.
ICC. Ah, you told me last time. Okay. Uh-huh.
RAC ICC. RAC International Commercial Center. Okay. These three
Mhm.
free zones are financial free zones of UAE, world famous.
Mhm.
And only these free zones offer the foundation structure. A foundation is set up for the benefit of specific or identifiable natural persons or a public benefit entity or both. Okay.
Okay.
So this is we're talking about now family foundation. This is the topic we are reading, family foundation.
So it can be formed only in three free zones: RAC, ICC, DIFC, and
ADGM.
ADG.
Okay. And the foundation will there will be ultimate beneficial beneficiaries who are natural
Mhm.
persons usually, or they
Mhm.
can be a public benefit entity, an NGO as well, or both,
Mhm. Mhm.
for the benefit of these. Clear?
Okay.
The
Mhm.
benefic These are the beneficiaries. Main activity is receiving, holding, investing, distributing, managing assets and funds related to savings or investment. But more
Mhm.
importantly, it does not carry a business or business activity. That is a huge clause. It may seem just one sentence, but this changes the entire outlook of the family foundation. It does not
Mhm.
carry on a business or business activity. That would have been taxable if done directly by the founder or settler or the beneficiary. These are the beneficiaries. And then there, in a family foundation, there is a founder and then there is a settler as well. The best law on foundation you can find in DIFC. So if you want to ever do a search, check for the foundation law in DIFC. Okay. So founder is the one who has, who was the sponsor who set up this foundation. Settler are, they have a different role. They settle these activities, holding, investing and disbursing and etc.
So the above
They
one
are
is not
treasury.
taxed for the above
Sorry,
one is not taxed. The above one is not taxed.
which one?
There is receiving, holding, investing. This.
No, no, these are the main activities. Yeah, this is the main activity. If you think about it, they are doing it on behalf of another person,
Mhm.
and it's all passive income. Think about it.
Mhm.
So that guy is sitting at home enjoying, and the foundation is investing money into national bonds or capital markets or crypto or whatever, and they are
Mhm.
getting returns and gains and whatever whatnot from there, even real estate, and then they're distribute. We're going to see more things about it now soon.
Okay.
And-
All right.
Okay, so and it does not carry on a business or business activity. They are simply doing passive investments and all that. And
Mhm.
these guys
I
don't.
mean, they don't run anything officially by a
uh,
legal license. Okay. Mhm.
no, it's a legal license. License is legal. Family foundations are a proper legal entity with
No,
juridical personality.
no. My question was, I mean, like, they don't officially do anything in terms of running a regular activity of
Yeah, yeah,
business,
yeah.
right?
When they have a foundation license, then they don't do business or business activity. Yes. The main
mhm,
purpose is not to avoid corporate tax. The idea they, I mean, because of this reason, sometimes because family foundations may enjoy certain benefits, uh, so sometimes they may be created for corporate tax avoidance purposes. Creating a layer between the original, real beneficial owner whose money is trusted to this foundation, and he may have incurred taxes, but since the money is now with the foundation and they are not doing business activity, so uh, there may be some windows of tax avoidance, or there may be other modus operandi as well, not necessarily one. There may be other. Tax avoidance is a very clever game, staying within the law. So the idea should not be to avoid corporate tax. And if there are any other conditions that are imposed by the minister through a ministerial decision, all of these conditions have to be met by the family foundation. So if they
mhm,
meet these conditions, what will happen? It may apply to FTA to be treated as unincorporated partnership, and that unincorporated partnership does not get taxed at entity level. Remember this point? Although the
mhm,
foundation is a juridical person, but it will be
mhm,
treated as an unincorporated partnership, meaning a non unnatural person. It will be treated as a non-juridical person, and it will
mhm,
not be taxed at entity level. This
mhm.
point clear?
Yeah, sure.
If application is approved, it may be treated as an unincorporated partnership from either the start of the year or next period. Simple. So that's only when the foundation becomes subject to tax. Uh, Sorry, when the foundation becomes out of the scope of tax. For applications submitted on 31st December, on or before 31st December 2025, FTA may approve retroactive treatment. FTA may allow that, okay, fine, although you submitted, on 31st December, we will grant you this status from before, from 2024. Example, family foundations accounting periods subject to tax. If approved, the family foundation is treated as an unincorporated partnership starting from the beginning of the tax period in which they apply, start of a future tax period, or a specific date set by the authority. So the ground has been, it's an open ground for FTA, where whatever date they deem fit, they can give the unincorporated status to that family foundation. So here it says retroactive, here it says future. So imagine. Monitoring and compliance. The authority can request any relevant information or record, etc. There is always a very stringent control on these type of requests. Because they are giving a relief actually. So they can ask for a lot of information and scrutiny will be there. There must be submitted within the timeline specified. Treatment of family foundation as uncovered partnership, where one or more beneficiaries of a family foundation are public benefit NGOs, public benefit entities. Then what will happen? The family foundation must meet any of the following additional conditions to be treated as an incorporated partnership. So when the NGO comes into picture, it becomes even more difficult to gain that unincorporated partnership status. Why? Because NGOs enjoy exemption. Remember this point. It is one of the exempt categories.
Hmm.
Qualifying public benefit entity. Remember
Yeah,
this?
yeah, yeah, it is
So
exempt
so if that public benefit entity is also, it becomes a beneficiary. If it is a beneficiary of a family foundation, then
Mhm,
additional conditions will apply. What are additional conditions? Such beneficiaries should not be deriving income that would be considered as taxable income in the event they had derived it in their own right. So, we have very strict rules for uh, qualifying public benefit entities, right? Remember that they can't engage into commercial activity. They can, their trustees or cannot, enjoy monetary benefits and other than salary, etc. Strict conditions were there, right? So this asset distribution cannot go to them. So because of these conditions, such beneficiaries should not be deriving taxable. If what happens to a qualifying public benefit entity, that it starts receiving taxable income. Common sense answer.
Receive a tax. Yeah, you have to pay tax for it. That's it.
Yeah, you'll lose your status as qualifying
Yeah,
public
your
benefit.
exemption will go. That's it. Yeah,
Exemption will no longer be applicable, right? So they
yeah.
so, so uh,
The basic fundamental of them is like, qualified public benefit entity
uh,
should meet all the conditions. If they meet the condition, it's exempted. If though
uh,
any of the conditions are not met, you will be
uh.
taxable.
So
That's
they
it.
should not receive income which would be seen as taxable income. If they had, such beneficiaries are not deriving income that would be considered as taxable income. So family foundation should not give any monies to basically these public benefit entities, which should be seen as taxable income. First thing, income that would be considered as taxable income is distributed to the relevant beneficiaries within 6 months from the end of the relevant tax period. Now, let's say in case such a taxable income exists, they are deriving such taxable income, let's say, then it is not only on accrual basis, it should be distributed within 6 months from the end of the relevant tax period. So that's a great loophole if you really think about it. So a qualifying public
What the
benefit,
point says, the
sorry,
in, the income that would be considered as a taxable income is distributed to the relevant beneficiaries within 6 months from
from
the
the
end of
end
the
of the
relevant tax period.
relevant tax period. So first point was what? First of all, there should be no taxable income. That was the
Mm-hmm,
first point. Second point
mm-hmm,
is a bit more flexible. Actually, hugely more flexible. What was that? Okay, we found out that there is taxable income that a public benefit entity is deriving from the family foundation. But
mm-hmm,
FTA has given a great benefit saying that if you distribute this income within 6 months from the end of the tax, then you will still get the benefit of unincorporated partnership. You will still gain the status of unincorporated partnership. They're talking to the family foundation. So basically, this was a cancer that came into body, but that cancer is rooted out 6 months, within 6 months. So you will still get the unincorporated partnership status. You got it?
mm-hmm.
No, okay, then explain to me what you understood.
Which point you're talking about? The first one, no,
Just summarize what you've discussed, these additional conditions when a qualifying public benefit entity comes into play.
okay, let me think
What are
once
we
again.
talking about? Treatment of a family foundation as
Patient
unincorporated
and
partnership, right?
incorporated partnership. Right.
What was this point? That a family foundation, because it's a company, by
Mm-hmm.
default, it will have to pay tax. That was the first point.
Correct.
Exception was created that because it is a family foundation, we are a bit lenient towards it. Okay,
Mm-hmm.
that's what the government is saying. So we want to help you. What help? We want to give you the status of
Unincorporated partnership.
unincorporated partnership. But in
Mm-hmm.
order to get that status, you have to do something. Free में कुछ नहीं मिलता. Nothing we will give you in free,
Mm-hmm.
right? What do you need to do? You have to make sure that you are complying with all of these conditions, right? First of all, you have to comply with all of these conditions. No tax
Mm-hmm.
avoidance. A founder settler should not, they should not be doing any business activity, वगैरह वगैरह. All of these conditions were original conditions of becoming an unincorporated partnership, right? That was for
Mm-hmm.
normal family foundation without public benefit entities. Now there's a unique family foundation which is helping another NGO. So that's where trouble comes in. Public benefit entity.
Is it is it says that a family foundation is also part of a public benefit entity? Is that what it means?
No, read it. Where one or
Where one or
more
more
beneficiaries
beneficiaries of the family foundation. Okay.
are public benefit
From the
entities.
okay, so
By
from the
beneficiary,
family
na, it's a
foundation,
beneficiary, na.
okay,
What does
beneficiary.
what does the beneficiary get from the family foundation? Why was the family foundation set up in the first place? Simple question, common sense question. Why did we need to form a family foundation in the first place? To help whom?
The family itself, right? To the beneficiaries of the family itself.
This family foundation was set up for the benefit of the beneficiaries,
Benefic-
some
beneficiaries,
natural
yeah.
persons,
For the
right?
family,
That was the
yeah, for the family.
original purpose of the family foundation.
Okay, I hope I got it right. I kept saying a couple of times about the family. The family foundation is being benefit to benefit the family itself. I'm talking about the family members itself.
Yeah,
In other words, it's called like natural person like
okay,
anyone. Yeah.
yes, you're right. You're right. Yeah. So it is a family. Okay, fine. Agreed. So it was set up for the family itself. Yes. And they were the beneficiary,
Mm-hmm,
right?
mm-hmm,
That
mm-hmm,
was the original fundamental matter. Now this
mm-hmm.
family foundation has started doing something else. Who are they helping in addition to the family beneficiary?
Public benefit entity.
Uh, was meaning, I mean, there was no need, but okay, fine. Some entity came in NGO asking for help. They said, okay, fine, we'll help you as well. We'll give you some donation or something. Okay.
Mm-hmm,
So they started funding or giving donation to some public benefit entities as well.
mm-hmm.
That happens. What result does it have on FTA? FTA becomes bit more alarmed.
Mm-hmm.
You understand this point?
Okay.
That's where
Okay.
FTA
Okay.
becomes a bit more alarmed, bhai. When the
Okay.
NGO comes into picture. Previously, it was only family members.
Mm-hmm.
FTA was okay, okay, yeah, if
So,
you just meet all of these conditions, we are happy. We'll give you unincorporated partnership status. But now what happened? Public benefit entities came into play.
mm,
Now FTA is worried. Okay, now the qualifying public benefit entities have also, started joining this family foundation.
the family foundation start to fund a public benefit entity, so there is okay, so there's become a
More
bit more.
conditions. Exactly. So what more conditions? That, whatever money this family foundation is paying to this public benefit entity, first of all, this should not be seen as,
Mm-hmm.
this should not be
A
uh,
taxable
have the features of a taxable income.
tax.
It should be for, okay, donation, fine, no problem. But it should not, they should not start selling stuff that will be seen as taxable income. You understand?
But do they have a scope to sell as a taxable income, by the way?
They don't actually. Yes, they don't.
Do they have a scope?
Yeah, they
Yeah.
don't have
So
a scope. They cannot sell to, they cannot do that kind of a business activity in the first place. It was there. But the point is, there may be some scenarios which we cannot immediately think of, but there can be. So think about it. What we have to refer to taxable income categories. We haven't read
like the
there.
reason why I asked you about this taxable income, first they don't have a scope. The reason they don't have a scope, they already mentioned in the first point above, which is like I'm talking about the above slide. They already mentioned there that anything they do apart from the certain activity, and that would be a taxable income. Here they put another clause stating there is no scope for a taxable income.
Yeah, so both things are the same basically, if you think about it. In short, they cannot engage into taxable activities, right?
Mm-hmm.
So first point was
On
that
the
they should
second,
not
like
engage into taxable activity. But let's say
mm-hmm.
in a rare circumstance that if it is seen, because Have you heard about the expression non-profit organization?
Yeah. In other
Now,
words, the NGO, the public benefit entity or non-profitable
don't rush, don't
business.
rush,
Well,
don't rush. You're becoming a
yeah.
tax practitioner, so don't rush because I'm going to tell you why I said, take it slow. What words did I use? What words did I use?
Non-profit organization.
Non-profit. I said non-profit. Now I'm going to change my words. Not for profit organization. What's the difference? Non-profit organization
Non-profit organization
and not
is
for profit organization. What's the difference?
uh, can non-profit is a company who does not run in terms of profitable. That's kind of I'm talking
Anything,
about
they don't do anything which could generate profits.
profits, which is public benefit entity.
Right.
Second,
Not
you
for
said
profit.
profit. You cannot engage in a business
No, no,
where
no,
it
no. No,
is
it's not engaged. Just think of what is a not for profit organization. Can you think of an example of what entity is actually a not for profit organization, but it is not a non-profit organization? Can you think of any entity? Have you ever heard about microfinance organizations?
hmm
What does a microfinance organization or a microfinance NGO do? MFI. We
Uh,
call them microfinance
yes,
institution.
yeah. Uh, they distribute funds with
They lend a
no,
fund.
yeah, they lend a fund. That's they lend a fund with no extra money made
No,
from that lending
no,
fund.
wrong. Absolutely wrong. By the whole point of a microfinance organization is they lend money. And for your information, this is a multi billions of dollars activity happening in the world. The biggest name in, yeah, in India, there are huge MFIs, microfinance.
That no, no, I'm talking about specifically here. I'm not talking about India. Do we have such things here, MFIs, by the way, in
That's what
UAE?
I'm trying to explain to you, that
Uh-huh.
this idea started from Latin America, but that the biggest nesting colonies were not Latin America. The biggest nesting areas was India, Bangladesh, Pakistan, Afghanistan, not Afghanistan that much, but these countries, because these countries are giants in terms of population. So, world's largest level of MFI activity is actually happening in India right now. World's largest. Have you ever heard of the Grameen Foundation?
No.
Foundation is one of the pioneers of microfinance. Microfinance started long before that in Latin America, in Africa. But then when it reached Professor Muhammad Yunus, who incidentally happens to be the president of Bangladesh nowadays, unless he's changed now, he's a Nobel laureate. Are you aware? He has won a Nobel Prize for his actions that he started. He was a doctor of economics, PhD in economics, and he took a few students or other PhD candidates uh, many years ago, 30, 40, 50 years ago, to a village, and he told them, let's do an experiment. I have some money of my own, very
Mm-hmm.
small money. I am going to distribute to a few people, and I'm
Mm-hmm.
going to charge interest on top of that.
Mm-hmm.
And there will be no collateral for this. These will
Mm-hmm.
be micro loans.
Mm-hmm.
So effective interest was as high as 20%, 22%. It is much higher than the banking level. Okay. But because the amount of loan was so small, 2000 rupees, takas, 5000 rupees or takas, very small loan. 50 years ago, 2000, 5000 was today's, I don't know, too much.
These have been given without no collateral, right? These are like small little
No
shop
collateral.
guys who,
Yeah,
yeah.
exactly. But then he created the concept of social collateral. Social collateral means, he went to a village, to a cluster. Cluster is a small, colony where people are living very closely knit. So it's like a brotherly. Have you heard about this word brotherly or something? I don't know what you call it in Hindi, like a brotherhood, like in one samaj, one very closely knit colony where people are like really like family, but they may not be actual families, but they will be like families or maybe from the same tribe, and their livelihoods are so strongly interconnected that
Community. Okay. Community.
community, that's the right word. Yes. So their livelihoods are so interconnected, they cannot live outside that community. They don't want to live socially, like psychologically. Their life, their cattle, their fields are there, right? So they have
Mhm.
to, and then they have face saving. So if
Mhm.
let's say a group of 10 people, Dr. Yunus may have lent to maybe 10 people, for example. So all the group of 10 people gave guarantees for each other.
Mhm.
They said, okay, no, no, don't worry, sir. We are all one family. We are one community. So what the loans you are giving us, every loan will be repaid to you. Maybe the
Mhm.
Chaudhary or the, what do you call, the high-ranking person in that community, so Mukhia, I think, na, in Hindi. That guy gives security. Don't worry, sir. I am responsible. These are all my community. I am the Mukhia of this community. Everyone will give back your loan. Like now, these people are under pressure and they have to do their small business activity, maybe purchase a cow or something, and with that, the sale of milk happens, and they are better off than before, and they were able to return the money. In
Mhm.
today's world, you will be surprised to learn that the default rate in microfinance is only 2%. Out of 100 rupees or dollars of loan, maximum default that happens is 2%, 3%. 98% of
Because the
money,
amount,
huh?
because the amount is lent loan are very smaller.
Small
The
loan.
numbers could be.
So it
Yeah.
doesn't bother pain them that much to pay 25% of interest on top of that. Why? Because the size of the principal is so small that it doesn't, really make a difference. That is called not for profit activity. So they are earning profit, but not for the sake of earning it. You get my point?
But why do you say? But the bottom line that you get an additional income out of that money that is being lent.
Ah, so exactly. And that's the whole point of setting up the NGO. That's how the NGO scales up. This MFI, sorry. That's the whole point of setting up
Right.
a MFI. Earning profit, but not for the sake of earning it. So that profit is then further lent to other people. So it becomes a revolving fund. Money goes out, 100 dirhams, money comes back, 125 dirhams. And this way, the size of the fund, microfinance fund, keeps increasing, right? That's the idea. But if you look into the UAE corporate tax law, you'll find that lending and interest income is a taxable activity,
Yeah.
right? So
Yes,
that's
it is.
it is a taxable act. Originally, it is a taxable activity. But
Mhm.
if this public benefit entity were approved under the law and it was listed in that cabinet decision as a qualifying public benefit entity, and the the because he, so first of all is it should not be there. In the second sentence, it is says income that would be considered as taxable income is distributed to the relevant beneficiaries within 6 months from the end of the relevant tax period. So, so the money is not kept back with the family foundation. They distribute it. If they have earned any profit, they distribute it to an NGO. And I'm not talking about only this taxable income is the income of the beneficiary.
Mm-hmm.
So if the beneficiary is earning any taxable income and it is distributed to that beneficiary within 6 months, they will still the FTA will keep a lenient eye towards it, and they will still grant the family foundation as an unincorporated partnership status. They'll say that, okay, fine, that's a qualifying public benefit entity and you have not kept the money with yourself. You have distributed it within 6 months, so we are not going to penalize you. You will still get the benefit of becoming an unincorporated partnership. Clear?
Mm-hmm.
Are you sure? Shall I move forward?
No, the above line and the bottom, I mean, more, 87, yeah.
The
Yeah, no, 87, 87, the page 87. Up.
Okay.
Yeah, such beneficiary is not deriving income that would be considered as a taxable income. This part is still not clear for me.
Okay. Uh, in their own right. Here, imagine an MFI. Here,
Hmm.
imagine a microfinance institution. What is their business? Lending business. So so on the first impression, prima facie, apparently the interest income that the microfinance NGO is earning, apparently it's a taxable income. Am I right? The beneficiaries are not deriving income that would be considered as taxable income, right?
Beneficiaries are not
Originally,
deriving
what is that MFI doing? What is the source of the MFI's
lending,
income?
lending,
Interest,
interest, yeah, lending
right?
money and
So
interest, yeah.
apparently it looks like a taxable income, but it is a qualifying public benefit entity, first of all. Secondly, once they earn that income, they don't hoard it. That income is again distributed further or revolved in the revolving fund within 6 months.
Mm-hmm.
So that NGO does not hold back that income or profits that they've earned. They utilize it again in their purpose, in their mission. You understand now?
Okay, so
Hoarding of
whatever
funds.
income
They
they
don't
have,
stop the
yeah,
money.
yeah.
But
So that's supposed to be. I mean, as per law, they distribute that money within 6 months time frame
within 6 months time frame. Yes.
between themselves, between the
Yeah, yeah.
beneficiaries, right?
Meaning, for example, more communities. So these would be the beneficiaries of that public benefit entity then. The income
Mm-hmm.
that would be considered taxable income is distributed to relevant beneficiaries within 6 months from the end of
Well,
the
what I'm
relevant.
confused of is, do they have a scope to earn a taxable income? Is the question.
What? MFIs?
No, not MFIs. I'm talking about public benefit entities.
Yeah, so MFIs are public benefit entities. No,
But
you
here we
mean
don't have such things, right? In UAE, in specific, we're talking about.
no,
Like,
no,
do
no,
they lend money to some
hold on. Listen to me. The Grameen Foundation has a charitable status. It is not
Mm-hmm.
a commercial entity. But then Dr. Yunus went on to found Grameen Bank as well. So now not one but two super entities are there. One is called Grameen Foundation, which is a welfare organization, which is an NGO. And then
Mm-hmm.
there is a commercial bank called Grameen Bank. Huge difference. Both do the same thing, exact same thing. But one does it for the purposes of earning profit.
Mm-hmm.
Other one does for the purpose of not making profits but utilizing it back into the community.
But
Bo-
what is the condition? They can only serve the community, correct?
Of course, if they started distribute, if Dr. Yunus started taking profit, say claiming that I am the 100% owner, of Grameen Foundation, whatever interest income has come and whatever bottom line profit after tax is there, that belongs to me. Immediately, instantly, Grameen Foundation loses their welfare status.
So the lending also happens within the community itself.
Yes, that. Do you know what is the whole purpose of a microfinance organization? You should do some research. You'll find out. The whole idea or the mission statement is poverty alleviation.
Correct, but it's not subject to any particular conditions. It can serve anybody and everybody, right? When
Oh,
you talk.
you could not be more wrong. You have no idea how stringent regulation is on the microfinance institutions. They are extremely and heavily regulated, my dear. There are laws, there are prudential regulations on them. Okay, they are
I think
subject to
sorry.
central bank regulation. Imagine. So they are heavily regulated. Why? Okay. So, anyways,
This microfinance, are we talking about something about NBFCs or something like that?
yeah, they are also, but the NBFCs are commercial entities. Please understand, there's a huge
Hmm.
difference. Same work that the NBFC does or SBFC, the small business, finance companies do.
Hmm.
Same work MFI also does, but the orientation is different. The orientation is poverty alleviation, my dear. The idea is that the founders will never benefit from the income except to the extent of their salaries. If you look into the Indian regulation, you'll be surprised on finding out the level of regulation that is there. Extremely strict. They have the level of schedules that they carry in the tax law on granting the status of welfare to such MFIs. That itself is frightening. Too many conditions imposed. The board has to be independent, the transparency should be above board, audits, extreme level of audits. There are governmental agencies in Pakistan. It's called PPAF, Pakistan Poverty Alleviation Fund. PPAF scrutinizes the MFIs. If anyone is violating, Federal Bureau of Revenue, the income tax authority, they scrutinize them. If any violation they find, immediate action. So, anyways, cut the long discussion short. They are heavily regulated entities. And do you think that the UAE Cabinet of Ministers is going to list an MFI without regulation? They will first of all scrutinize the hell out of them. This is UAE. Okay? They will scrutinize and then they will list as a public benefit entity. That's what happens in UAE. Okay.
Okay,
Any entity will never be listed without scrutiny. Okay, anyways, yeah. Let's
I'll
finish it.
look into this. Yeah.
Huh?
I will look into this
No problem.
microfinance
Yeah,
or whatever.
you can ask me later on any question. So let's finish this
Yeah, sure.
and let's call it a day today after this. Yeah. The last part.
Hmm.
Until now, this is clear to you.
Yeah, yeah.
Okay. A juridical person, the last part we are reading. A juridical
Hmm.
person that is wholly owned and controlled by a family
Hmm.
foundation. So that's another very, very interesting part. Huh? We understand it well. What are we talking about? A company, a body corporate, a
Company.
juridical person.
Company.
Yeah.
Hmm.
That is wholly owned and controlled by who? That family foundation.
Family foundation.
Is also treated as an unincorporated partner. It's a juridical person, man. It's a company. But
Hmm.
it will also be treated as what?
Unincorporated partnership or family
Partnership.
foundation.
That is treated as it can make an application to FTA to be treated as an unincorporated partner. Imagine. So if you set up family foundation and it owns another foundation, for example, or may even a trust, because in UAE trust is also a body corporate, right?
Hmm.
And that trust can go to FT and make an application saying, sir, although we are a body corporate, But since we are doing all the, same things as the family found, so similar, furthering the mission or doing welfare activities, can you please treat us also as unincorporated partnership? We are a subsidiary of Falana Falana Foundation, to whom you have already approved the status of unincorporated partnership. Do you know what will FTA say? FTA will say, yes, you can. Enjoy. We are giving you the status of unincorporated partnership, where all of the following conditions are met. But that company, that subsidiary, they will have to meet certain conditions, which are easy. Juridical person is wholly owned and controlled by the family, 100% ownership, first condition, either
Mm-hmm.
directly or through uninterrupted chain of other entities. So, as we call it, first tier subsidiary, second tier subsidiary, third. So, it can be a chain of subsidiaries, and
Mm-hmm.
ultimately, the third tier subsidiary is 100% owned by the unincorporated that family foundation.
So one of the major condition is to get this, you need to be 100%
Owned, yes. First
owned.
condition is wholly owned. Clear?
Mm. Yeah. Okay.
What was the second condition? The juridical person meets the basic conditions of welfare purpose test, non-business activities, and anti-avoidance test. You remember where these tests were originally mentioned?
For the public benefit entities, right?
Here, you remember? Receiving, holding this, it does
Mm-hmm.
not involve into business activity, no tax avoidance. These were the fundamental conditions of being
Mm-hmm.
treated as unincorporated partnership for a family foundation. Same thing, basically same conditions they have to comply with one additional condition, that they should be fully owned and controlled by the family foundation. If they do that, if they are already 100% owned and they are meeting the rest of the fundamental conditions, then they will also be able to enjoy the status of